Meet Mark. He's like many of us. He's studied charts, learned strategies, and feels ready to take on the market. He sees himself as a disciplined trader, but the numbers in his account tell a different story. A slow, quiet bleed. This isn't a story about a bad strategy. It's a story about the unseen enemy of every trader, our own mind. Mark just closed a trade. A loss, not a big one, but it stings. His heart beats a little faster. Frustration bubbles up. He leans back in his chair, staring at the red number on his screen. The plan says to step away, review the trade later with a clear head, but a voice in his mind whispers, you need to make that back. Now. So, he doesn't get up. His eyes are glued to the charts, scanning, hunting. He's no longer looking for a high-probability setup that fits his plan. He's looking for a chance to erase the sting of the last loss. This is what we call revenge trading. It feels logical. You lost money, so you need to win it back. But in this state, he's not trading his strategy. He's trading his emotions. A professional trader, after a loss, physically steps away. They walk, get a glass of water, reset their nervous system. They know the market will be there tomorrow. Their mental capital is more important than any single trade. Suddenly, Mark sees a candle moving fast. A strong green bar. His mind screams, this is it. It's taking off without me. His hand hovers over the mouse. A moment of hesitation. The fear of missing out, or FOMO, is powerful. It feels like a rare opportunity is slipping through his fingers. He clicks. He's in. He didn't check his rules. He didn't wait for the candle to close. He just reacted to the price action. This is a classic trap. Our brains are wired to chase, to fear being left behind. It feels like smart, quick thinking. But trading based on FOMO is like jumping onto a moving train without knowing where it's going. It's gambling, not trading. A professional waits. They understand that there are infinite opportunities in the market. They would rather miss a move than enter a trade that doesn't meet every single one of their criteria. Their consistency comes from waiting, not from chasing. Now Mark is in the trade. The price moves in his favor. He's in profit. But he isn't calm. He's anxious. He watches every tiny tick, his stomach in a knot. The fear of this small profit turning back into a loss is overwhelming. The logical move, according to his plan, is to let the trade run to its target. But the emotional need for relief is stronger. He can't take the stress anymore. He closes the trade, pocketing a small gain. He sighs in relief. That felt good. He locked in a win. But what just happened? He cut his winner short. This behavior, repeated over time, is devastating. It mathematically ensures that his losses will be larger than his wins. His trading edge, the very foundation of his strategy, is destroyed. A professional trader manages the trade, not their feelings. They use a trailing stop or trust their predefined profit target. They have trained themselves to endure the discomfort of holding a winning position, knowing that's where the real profits are made. The next day, Mark has a great trade. It hits his full target. He feels brilliant, like he's finally cracked the code. The market seems easy. He thinks, I'm on a roll. I should capitalize on this. With his confidence soaring, he spots his next setup. But this time he does something different. He doubles his position size. He wants to feel that rush of a big win again. This is euphoria-driven trading. It feels like smart risk-taking, pressing your advantage. But it's just the flip side of revenge trading. It's another form of emotional decision. By suddenly increasing his size, he's not following a risk management plan. He's gambling. If this trade is a loser, the loss will be twice as large, wiping out his previous win and more. It creates a boom and bust cycle in his account. A professional maintains a consistent position size, regardless of the previous outcome. They know that long-term success isn't about one big win. It's about the consistent application of their edge over hundreds of trades. At the end of the week, Mark opens his journal. He dutifully records his entries and exits, the profit or loss for each trade. It looks neat and organized. He thinks he's doing the right thing. But his journal is missing the most important data: his behavior. He doesn't write down that he revenge traded after a loss. He doesn't note that he jumped in on a trade because of FOMO. He doesn't record the anxiety that made him close a winner early, or the overconfidence that made him double his size. Because he isn't tracking his behavior, he can't see the pattern. He looks at his losing record and concludes his strategy must be flawed. He goes back to YouTube, searching for a new, better systema. Holy Grail. He's stuck in a loop, blind to the real problem. A professional's journal is a behavioral diary. They write, felt anxious, and closed early, or ignored my rules and entered on impulse. They study their psychological patterns just as much as they study charts, because they know that in trading, you are the system. Mark's story isn't unique. It's the story of the vast majority of traders. They are on a constant search for better indicators and strategies, believing success is a technical problem. But they're losing a game, they don't even know they're playing the inner game. Their accounts aren't dying from 1,000 bad trades, but from 1,000 small, repeated emotional reactions. The quiet, unglamorous truth is that successful trading is a behavioral skill. It's not about finding the perfect strategy. It's about your ability to execute a decent strategy with discipline over and over again, under pressure. It's about training your mind to remain calm when your instincts are screaming at you to do the wrong thing. It's about being the professional who steps away, who waits, who trusts their plan, and who studies themselves relentlessly. The market is a mirror. It reflects back your own discipline, patience, and emotional maturity. The journey to becoming a consistently profitable trader isn't about mastering the markets. It's about mastering yourself. Thanks for watching. If this resonated with you, follow our channel for more insights into the psychology of trading.